Welcome to JS Online Tuitions. Today in accounts we'll be looking at the trial balance. So what is the trial balance? The trial balance is a list of balances extracted from the ledger. These balances include both debit and credit balances. A trial balance is not an account, but a list of balances for all assets, expenses and losses, liabilities, capital and income. Although the trial balance is not considered as an account, it consists of two sides, the left side, which is the debit side, and the right side, which is the credit side. A trial balance is usually prepared at the end of an accounting period after balancing and closing all the ledger accounts at the certain date. Assets, expenses, and purchases appear on the debit side of the trial balance, while revenue or income, liabilities, and sales appear on the credit side of the trial balance. So we are going to use PEALRS for us to know the things that we are supposed to record on the debit side and the things that we're going to record on the credit side. So as you can see, P represents purchases, then A represents expenses, and A represents assets. So purchases, expenses, and assets are going to be shown on the debit side of the trial balance. Then R represents revenue, L represents liabilities, S represents sales. So revenue, liabilities, and sales are going to be recorded on the credit side of the trial balance. When all entries have been recorded correctly in the trial balance, the debit side total must be equal to the credit side total. If the debit column total is equal to the credit column total of the trial balance, it is assumed that the recordings of the financial transaction in the journal and the ledger are arithmetically accurate and were correctly done according to the double entry principle. When the debit column total and the credit column total of the trial balance are equal, this does not always mean that the arithmetic accuracy of the trial balance was done correctly. There are some errors that can be omitted but will not affect the balancing of the trial balance. In case the two total of the trial balance are not equal, this indicates that there are some errors that were made that affect the trial balance. These errors are mostly made in the preparation of prime entry books, also referred to as books of original entry. Let us now look at the uses of the trial balance. So the first use we have, it helps in preparation of the financial statements. The trial balance provides a summary information of all the balances that are used to prepare the financial statement. The financial statement include the trading, profit and loss account and the balance sheet. All the balances of the income and expenses account are used in the preparation of the income statement account, while the balance sheet is prepared from the balances of assets, capital and liability accounts. Then the second use we have serves as the proof for the double entry posting accuracy of the bookkeeping. The third use we have, used for reference purposes. The trial balance ensures that the account balances are accurately extracted from accounting ledgers and can be used for reference and also during planning. Then our fourth use we have provides the arithmetic accuracy of the double entry records made in the ledger accounts. If the totals of the trial balance are not equal, this shows that there are some errors that had been made in recording of financial transaction in the ledger. These errors are investigated and resolved before preparing the financial statement. In this way, the trial balance assists in the identification and correction of errors done during recording of financial transactions. Let us now look at the stock account. Stock represents the total value of goods not sold by the end of a given trading period. Stock is an asset to the organization or an individual. Stock in business can either increase or reduce. Stock increase is caused by purchases or returns inwards. So returns inwards also referred to as sales returns. Then stock decrease is caused by sales or returns outwards. And we know that returns outwards are also referred to as purchases returns. Note that stock can also reduce illegally through theft and beverages, but this will be considered at a higher level of study. The activity that leads to an increase or decrease in stock cannot all be affected in one account called the stock account by simply debiting increase and crediting the reduction. This process does not enable an account to balance, as the prices at which stock is acquired are not the same as that which they are sold. Some profit margin is usually added to the acquisition prices. To avoid such a situation, the stock account is divided into 4 sets of accounts, each recording a completely different activity. These 4 accounts are, so we have the purchases account, the purchases retains account, the sales account, and the sales retains account. So we start with the first one, which is the purchases account. These accounts record all the purchases of stock by the firm in a given trading period. This account is usually debited because stock, like all the assets, are debited with increase. The cost price of stock is the relative value here. Then the second one, we have the purchases retains account. This account records all the goods previously purchased but are retained to the suppliers because of various reasons. This account is credited because it reduces stock, which is an asset. Then the third account, we have sales account. This account records selling of stock. When stock is sold, this reduces stock, and this means that account must be credited. This account is recorded using the selling price at which the goods have been sold. Then the fourth account, we have the sales retains account. This account records all the goods that customers had previously purchased but retained them because of various reasons. This leads to the increase in stock, and this means that this account must be debited. So the purchases account and the sales retains account are debited because they result in an increase of stock in the firm. Sales and purchases retains account are credited because they reduce the amount of stock. After balancing off the balances in the stated account, the total accounts are transferred to their respective side of the trial balance. There are 2 types of stock, namely the opening stock and the closing stock. The opening stock is the total value of goods in hand at the beginning of the financial period, while the closing stock represents the total value of goods in stock at the end of the accounting period. The balance in stock account in the ledger appears in the trial balance on the left side, as it is a debit balance. At the time of extracting the trial balance, there is no account for closing stock in the ledger, and therefore closing stock does not appear in the trial balance. Let us now look at how to prepare a trial balance. So the first thing that you must do is to ensure that all the transactions have been posted to their relative ledger accounts based on the double entry principle. Then the second procedure, we have balance all the accounts, that is assets, liabilities, expenses, income and capital accounts. Then our third procedure, prepare the trial balance worksheet. Our fourth procedure, list all the accounts in the details column and their balances in the appropriate columns. All balances brought down appearing on the debit side of the ledger accounts are put on the debit column of the trial balance. All the balances brought down appearing on the credit side of the ledger accounts are put on the credit side of the trial balance. Then our last procedure, sum up the balances in each column and get the total for the debit column and the total for the credit column. So the format of the trial balance, the first thing that you're supposed to do is to put up the title of the trial balance. So the trial balance has 3 columns. So in the first column we have details, in the second column we have debit, and in the third column we have credit. So let us now look at this example. The following transactions were obtained from the books of Dorothy for the month ended May 2018. So we have May 2018. On the first, cash at bank amounting to 4,500, cash in hand amounting to 2,600. Then on the third, bought motor vehicle by cash amounting to 450 kwacha. Then on the 6th, received cash from memory amounting to 500 kwacha. Then on the 7th, withdrew cash from the bank amounting to 150 kwacha. On the 11th, paid for rent by cash amounting to 230. Then on the 17th, sold goods by cash amounting to 479 kwacha. On the 19th, paid for electricity bills by check amounting to 200 kwacha. On the 24th, paid wages by cash amounting to 500 kwacha. Then on the 26th, bought goods in cash amounting to 350 kwacha. On the 28th, received a check from Catherine amounting to 100 kwacha. Then on the 31st, paid insurance by cash amounting to 234 kwacha. So the requirements: A, to prepare a 2-column cash book. B, post the transaction in the relevant ledger account and balance them off. Then C, prepare the trial balance from the balances from the ledger. So the first thing that we're going to do is to prepare the 2-column cash book. And I said that the thing that you must do when you have been told to draw the 2-column cash book is to write down the title. So I've already written down the title, and the title is going to read Dorothy 2-column cash book for the month of May 2018. So that's the first thing that we are going to do. And since we are using kwacha, we are going to put our case. And since the year is 2018, we'll put our 2018 here. So let us look at the first transaction. So on the 1st of May, cash at bank amounting to 400 and 500 and cash in hand amounting to 2,600. That means that we're going to record bank on the debit side at 4,500 and we're going to record cash on the debit side as 2,600 in the cash account. So let's just record those transactions. So on the 1st of May, so we can say bank, we can debit bank by 4,500. Then we can also debit our cash. So debit cash as 2,600. Then on the 3rd, bought motor vehicle by cash amounting to 450. So bought motor vehicle by cash amounting to 450. So this type of transaction is taking money out of the business. That means that we are going to credit our cash account. So we are going to say on the 3rd of May, we'll say motor vehicle. And since the motor vehicle was bought by cash, that means that money was going out of the business, and we're going to record it here on the credit side in the cash account. Then on the 6th, received cash from memory amounting to 500 kwacha. So this type of transaction is bringing money into the business. That means that we're going to debit that amount in the cash account. So on the 6th of May, we're going to say memory, and we're going to debit that amount 500 on the debit side of the cash account. Then on the 7th of May, withdrew cash from the bank amounting to 150. So this type of transaction is a contra entry transaction. That means that the amount of money in cash is going to increase and the amount of money in the bank account is going to reduce. And that means that we're going to debit the cash account and we're going to credit the bank account. So on the 7th of May, we can say cash stroke bank. And in our folder there, we're going to say contra entry. In the transaction that is receiving, in the account that is receiving, we have said is the cash account. So we're going to debit the cash account with 150. And the amount that is giving out is the bank account. So we're going to credit the bank account with 150. Then on the 11th of May, paid for rent by cash amounting to 230. So this type of transaction takes out money out of the business, and that means that we're going to credit the cash account. So 11th of May, we're going to say rent. And since rent was paid out by cash, we're going to credit the cash account, 230. Then on the 17th, sold goods by cash amounting to 479 kwacha. So this type of a transaction is bringing money into the business, and since the goods were sold by cash, that means that we're going to debit the cash account. So we're going to say sales and we debit that amount, 479. Then on the 19th, paid for electricity bills by check amounting to 200 kwacha. So this type of transaction takes money out of the business. That means that we are going to credit the bank account. So the 19th of May, we're going to say electricity. We're going to credit that amount. So it's 200 kwacha. Then on the 24th, paid wages by cash amounting to 500 kwacha. So this type of transaction is taking money out of the business, and since cash was used, that means that we're going to credit the cash account, 24th of May. So we're going to say wages, we're going to credit that amount. Then on the 26th, bought goods in cash amounting to 350. This type of transaction is taking money out of the business, and since goods were bought by cash, that means that we're going to credit the cash account, and we're going to say purchases, we'll credit that figure, 350. Then received a check from Catherine amounting to 100 kwacha. So that type of transaction brings money into the business. That means that we are going to debit the bank account. So 28th of May, we're going to say Catherine, and we're going to debit that amount, 100. Then on the 31st, paid insurance by cash amounting to 234 kwacha. The type of transaction takes money out of the business, so which means that we are going to credit the cash account. So we'll say insurance, 234. So the next thing that we're going to do is to find our totals on the cash account and to find the balance carried down and the balance brought down. So as we said when we are looking at the 2-column cash book, first of all, you're going to add the debit side and credit side, and you're going to record the totals, the figure that is going to have a higher amount. So when you add the debit side and the credit side, you're going to discover that the higher amount is going to be on the debit side, and the higher amount is going to be 3,729. So we are going to record 3,729 on the debit side, and we're going to record 3,729 on the credit side of the cash account. And for us to find our balance carried down, which is going to be on the credit side, we're going to say 3,729 minus all the figures that are in the credit column. So when we say 3,729 minus all the totals that are on the credit side of the cash account, our answer is going to be 1,965. So it's going to be 1,965. In this, we can say this is going to be our balance carried down, and this is recorded at the end of the month. And for us to find our balance brought down, 1,965 is going to be shown on the debit side. So we're going to have 1,965 on the debit side, and that amount is shown on the first day of the next month. So the next month there is June, so we can say 1st of June. So we go to the bank account, and for the bank account we do the same. We're going to add the debit side and credit side, and the totals there we're going to record a higher figure. So when we add the debit side and credit side, we're going to discover that the debit side is more than the credit side. In the totals there, we're going to have 4,600 on the debit side, and we're going to record that figure also on the credit side as 4,600. And for us to find the balance carried down on the credit side, we're going to say 4,600 minus the totals that are in the credit side. So we're going to say 4,600 minus 200 minus 150. And our answer there, we're going to have 4,250 as balance carried down on the credit side. So for us to record our balance breakdown, it's going to be shown on the debit side as 4,250. So that's how you can find the 2-column cash book for dollars for the month of May 2018. Where you have questions, please ask in the group. Let us now look at question B. Post the transaction in the relevant ledger account and balance them off. So that's the next thing that we are going to do. So we are going to start with the first transaction. So the first transaction that occurred on the 1st of May, we are going to say, since we are using Kwacha, we can put our K here and our K. The year is 2018. So here we know we have 1st of May. So we have our bank. Our bank, we're going to record it on the credit side of the capital account as 4,500. In the cash there, we're also going to record it on the credit side as 2,600. Let us look at the other transaction. The other transaction reads, bought motor vehicle by cash amounting to 450 kwacha. So we have motor vehicle account. So we're going to put our K in the year. We know that 2018. So bought motor vehicle by cash amounting to 450 kwacha. Since we are buying motor vehicle, that means that the motor vehicle account has to be debited, and we can say that was on the 3rd of May. So we can say cash, and that amount has to be debited to the motor vehicle account as 450. Let's look at the other transaction. On the 6th, received cash from memory amounting to 500 kwacha. So for us to record the account of memory, that means that we're going to credit, since memory was giving out money to the business. So we're going to put our K. The year is 2018. So that is on the 6th of May. In there we can say cash. Since memory was paying out cash to the business, that means that money was going out of the business, and we're going to credit that amount. Let us look at the other transaction. On the 7th, withdrew cash from the bank amounting to 150 kwacha. So this type of transaction is a contra entry transaction, where the amount of money in cash is going to increase and the amount of money in bank is going to reduce. So we say that a contra entry transaction is not recorded in the trial balance, since the double entry system is already done in the cash book. So there's no need for us to record that type of transaction in our ledger account. Then on the 11th, paid for rent by cash amounting to 230. So for us to write down the account for rent, that means that we're going to debit rent account, since that money was paid for that account. So we're going to say our K year 2018. So our date, we have 11th of May, and since we paid rent, that means that the rent account is receiving by 230. Then on the 17th, sold goods by cash amounting to 479. So that type of transaction, we're going to have sales. And since goods were sold by cash, that means that the goods were going out of the sales account. That means that we're going to credit the sales account with 479. So for the sales account there, we can say on the 17th of May, since goods were sold by cash, we can say cash, and that means that we are supposed to credit our account. Then let us look at another transaction. On the 19th of May, paid for electricity bills by check amounting to 200 kwacha. So that type of account, which is the electricity account, we're going to debit it with that figure. So on the 19th of May, we can say bank, we're going to debit that figure. Then on the 24th, paid wages by cash amounting to 500 kwacha. So that type of account, we're also going to debit it. We're going to debit wages account since it was receiving. So it was on the 24th of May, we can say cash, and we're going to debit with 500 kwacha. Then on the 26th, bought goods in cash amounting to 350. Bought goods in cash amounting to 350. Since goods were bought in cash, that means that we have the purchases account. And since the goods were bought, that means that there was an increase in goods. And we're going to debit the purchases account. So that type of transaction occurred on the 26th of May. So we're going to say cash, and we're going to debit since we purchased goods 350. Then on the 28th, received a check from Catherine amounting to 100 kwacha. So for us to record the transaction in Catherine account, that means that we're going to credit the account of Catherine since Catherine was giving out money to the business. So that type of transaction occurred on the 28th of May. We're going to say bank, and we're going to credit that amount, which is 100 kwacha. Let us look at the last transaction. So we have paid insurance by cash amounting to 234 kwacha. So that type of a transaction, for us to record it in the insurance account, that means that we are going to debit the insurance account since it was receiving. So that occurred on the 31st of May. We're going to say cash, and we're going to debit our insurance account with 234. Since we're done putting up our transaction in the respective ledger accounts, the next thing that we're supposed to do is to balance up the ledger accounts. Well, we're going to start with capital account. So for us to balance up for capital account there, we're going to say 4,500 plus 2,600. So I'm going to have 7,100, and I'm going to record that on both the debit side and the credit side, 7,100. So there I'm going to find the balance carried down. So the balance carried down is going to be on the debit side as 7,100, and we're going to have our balance brought down, and that balance brought down is going to be on the credit side as 7,100. So when you're recording our trial balance, that means that the capital there is going to be shown as 7,100 on the credit side of the trial balance. Let us go to motor vehicle account. So for us to balance up motor vehicle account, we're going to have 450 on the debit side and 450 on the credit side. So there we can say balance carried down. So our balance carried down is going to be shown on the credit side as 450, and to find our balance brought down there is going to be shown on the debit side as 450. So it's going to be shown on the debit side as 450. That means that when we write down our motor vehicle in the trial balance, we're going to record 450 on the debit side. Let us balance up the account for memory there. So we're going to say 500 on the credit side and 500 on the debit side. So let us find our balance carried down. So the balance carried down is going to be shown on the debit side there. Then our balance brought down is going to be shown on the credit side as 500. That means that when we write down memory in the trial balance, we're going to record it on the credit side as 500. Then to balance up the account for rent, we're going to have 230 on the debit side and 230 on the credit side. So we can see our balance carried down there. We're going to have 230 on the credit side, and for us to find our balance brought down, that is going to be shown on the debit side as 230. And that means that we're going to write down rent in the trial balance on the debit side as 230. For the sales account, to balance it up there, we're going to have 479 on the debit side, 479 on the we're going to have 479 on the credit side and 479 on the debit side. So we can say our balance carried down, we're going to have 479 on the debit side there. So we're supposed to find our balance brought down. So it's going to be 479 on the credit side. That means that when we record our sales in the trial balance, we're going to show it on the credit side of the trial balance as 479. Let us balance up the electricity account. That means that we're going to have 200 on the debit side and 200 on the credit side. So let us find the balance carried down. So we have balance carried down there. That means that 200 is going to be shown on the credit side, and we're going to say balance brought down. So we're going to have 200 on the debit side of electricity account. That means that when we write down electricity in the trial balance, we're going to record it on the debit side as 200. Let's balance up wages. For wages there, we're going to say 500 on the debit side and 500 on the credit side. That means that our balance carried down is going to be shown on the credit side as 500. And to find the balance brought down there, we're going to have 500 kwacha on the debit side of wages account. That means that when we record wages in the trial balance, we're going to show it on the debit side as 500. Let us look at purchases. We're going to say 350 on the debit side, 350 on the credit side. So we're supposed to find the balance carried down. So we are going to have 350 on the credit side there as balance carried down, and we can say balance brought down. That is going to be shown as 350 on the debit side. That means that when we record our purchases, we are going to record the figure as 350 on the debit side of the trial balance. balancing up the account of Catherine, we're going to have 100 on the debit side and 100 on the credit side. So we can say balance carried down. We're going to have 100 on the debit side there. So we're going to have balance brought down on the credit side as 100. That means that when we record Catherine in the trial balance, we're going to record 100 on the credit side of the trial balance. For insurance account there, we're going to say 234 on the debit side and 234 on the credit side. So we're supposed to find our balance carried down. We're going to have 234 on the credit side and the balance brought down. We're going to have 234 on the debit side. That means that when we record insurance in the trial balance, we're going to show it on the debit side as 234. So let us now answer question C, which requires us to write down the trial balance. So question C reads, prepare the trial balance from the balances from the ledger. So for us to prepare the trial balance from the balances of the ledger, the first thing is to write down the title. So the title is going to read Dorothy trial balance for the month of May 2018. So I've already written the format. We have details, then we have debit and credit. And since we know that we are using kwacha, we can put our K's. We can say K here and we can say K. So the first thing that we're going to record, let us look at the information that we have. So in the 2-column cash book, we have this information, cash account. For the cash account, the balance brought down there, we have 1,965, and that is shown on the debit side. Then for the bank there, we have 4,250 on the debit side. So these are the two transactions that we are going to record. So we can say cash, and cash, since it is having balance brought down on the debit side as 1,965, that means that we're going to show that figure on the debit side of the trial balance, and the balance brought down in the bank account is showing 4,250 on the debit side. That means that bank there, we can say 4,250 on the debit side of the trial balance. Let us look at the other information. Then we have capital account. Capital account there, the balance brought down is shown on the credit side as 7,100. That means that we're going to say capital, and we're going to credit capital in the trial balance with 7,100. So we'll say capital, and we're going to credit capital with 7,100. Then the other ledger account, we have motor vehicle account, and for motor vehicle account, the balance breakdown is shown on the debit side as 450. That means that we're going to say motor vehicle, and we're going to record 450 on the debit side of the trial balance. So we can say motor vehicle. Motor vehicle has 450 on the debit side. Let's look at the other information that we have. So we have memory. In memory, the balance breakdown is shown on the credit side as 500 kwacha. So in the trial balance, we're going to say memory, and we're going to credit memory by 500 kwacha. Then for rent there is having balance breakdown on the debit side as 230. That means that in the trial balance, we're going to say rent, and we're going to debit rent with that amount as 230. So let us record those two type of ledgers accounts. So the first one that we have we have memory. And we said memory, since it's showing balance brought down on the credit side, that means that we're going to have 500 on the credit side. Then for rent, since it is showing the balance brought down on the debit side, that means that we're going to debit our rent account. So we're going to say rent, we're going to debit with 230. Then the other types of accounts, we have sales account. For sales account, the balance brought down is shown on the credit side as 479. That means that in the trial balance, we're going to say sales and we're going to credit that amount as 479 in the trial balance. Then for electricity account, the balance brought down is 200 on the debit side. That means that we're going to record our electricity and we're going to debit with that amount in the trial balance. Then for the wages account, it is having balance brought down on the debit side with 500. That means that in the trial balance, we're going to say wages and we're going to debit it with that figure. Then for purchases, it is having balance brought down on the debit side there. That means that we're going to say purchases and we're going to debit with that figure in the trial balance. So let us record those type of transaction. So we have sales. So sales there, we're going to credit with 479. Then we have electricity. Since the balance breakdown is on the debit side, we're going to record 200 on the debit side. Then we have wages. For wages, since the balance brought down is showing the debit balance, we're going to record it on the debit side of the trial balance as 500. Then we have purchases. Since purchases is showing balance brought down on the debit side, that means that we're going to debit the trial balance with 350. Let us look at the other transactions. So for the other transactions, we have Catherine account and the balance brought down for Catherine account is shown on the credit side as 100. That means that in the trial balance, we're going to write down Catherine in our details and we're going to credit it with that amount. Then for the insurance account, it is showing the balance brought down on the debit side as 234. That means that we're going to debit our insurance in the trial balance. So let us record those type of transactions. So we have Catherine. So Catherine is showing the balance brought down on the credit side. That means that we're going to record it on the credit side of the trial balance. Then for insurance, the balance brought down is shown on the debit side. So we are going to debit it with that amount as 234. So after we are done recording all the entries from the ledger account, the thing that we're going to do is to find our total. So after we're done recording all the transactions in our ledger account, that means that we're supposed to add the debit side and credit side. And the debit side must balance with the credit side. So on the debit side, I have 1,965 plus 4,250 plus 450 plus 230 plus 500 plus 350 plus 234. The answer there is 8,179. Then on the credit side, I have 7,100 plus 500 plus 479 plus 100. The answer there is 8,179. So those are going to be our answers. So as you can see, the trial balance has balanced. So where you have questions, please ask in the group. Next time we'll be looking at a different topic. I'll actually share the exercise that you need to do in the group. But where you have questions, please ask in the group. I'll meet you next time. and God bless. Peace. So this program has been brought to you by Siwale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless. Hi, this is Joe from Siwale Production. I hope you're doing fine. If you're new to my channel, make sure you subscribe so that each time I post a new video, you might be notified. Today we're going to be looking at the answers of accounts paper 2 of 2016, and specifically we're going to look at question 1C, and this question deals with the trial balance. But before we take a look at the question, I'm just going to announce that my online tuitions will be resuming, and the online tuitions, they only go at 100 kwacha per subject, and that's monthly. I'll be providing the following subjects: mathematics, physics, chemistry, biology, and accounts. And registration, it's only free. That means if you want to join the WhatsApp group, you join for free, and you're only going to be required to pay immediately we start or immediately I resume the online tuitions. So let us take a look at the question. So question 1C reads: S. Msongo is a sole trader, and the following transactions were extracted from his books on 31st December 2014. So as you can see, we have those transactions. The question proceeds: the given transactions took place after the extraction of the above trial balance. So they took place on 31st December. The first transaction, we have bought goods by check amounting to 90 kwacha, bought goods on credit amounting to 500 kwacha, sold goods by check amounting to 700 kwacha, paid cash for repairs amounting to 50 kwacha, cash sales amounting to 240 kwacha, received a check from S. Simba, a debtor, amounting to 520 kwacha. So we're going to start with the first transaction, bought goods by check. And from this, we need to identify two types of accounts which are affected. And the two types of accounts which are affected, we're going to have purchases and bank. Since the sole trader bought goods, that means we're going to have purchases, and since he bought by check, that means we're going to have the bank account. So that's going to be the first thing. So we are going to have the purchases, account. We're also going to have the bank account. Let us take a look at the trial balance that we have been given. In the trial balance that we have been given, the purchases in the bank, we can find them. That means we have some balances. So the balance of purchases is 6860, and the balance of bank is 1620. So we're going to say the balance of our purchases there, we have 6860. Then the balance for bank there, for bank we have 1620. And let us look at the transaction. The transaction amounted to 90 kwacha. So bought goods by check amounting to 90 kwacha. So which means in the purchases account there, we're going to say bank, and since the sole trader bought the goods, that means that the goods were brought into the business, and we're going to record that to the debit side, so 90 kwacha there. And in the bank account there, we're going to record on the credit side, since the sole trader was paying out for the goods, so we're going to say purchases of 90 kwacha. Let us take a look at another transaction. Another transaction reads bought goods on credit amounting to 500 kwacha. So the two accounts that are going to be affected, we're going to have purchases and the creditors account. So we're going to have purchases and the creditors account. But if we take a look at the transaction that we've been given in the trial balance, we don't have the creditors, so which means we're not going to have any balance for the creditors. So we're going to have the creditors account there. So I've said two types of accounts that are going to be affected. We're going to have the purchases and the creditors account. So in the creditors account there, we're going to record the purchases, and since we bought from the creditor, that means the creditor was giving out the goods, and you're going to record that on the credit side, 500, and let us record that in the purchases account. So we have our purchases account there. Since the sole trader bought the goods, so we are going to say creditor with 500, and we're going to debit that amount. Let us take a look at another transaction. Another transaction reads sold goods by check amounting to 700. So sold goods by check. The two types of accounts that are going to be affected there, we're going to have the bank account. We're also going to have the sales account. And if we take a look at the information that we've been given, the sales, we have been given the sales there as 13,400. So which means we have the balance for sales. So sold goods by check, that means the sole trader was receiving 700. So we're going to say sales, and we're going to record that in the bank account to the debit side, 700. Write down the sales account, and we know that we have a balance in the sales account, and this balance is given as 13,400. 13,400, and I said that two types of accounts that were affected, we had bank and sales. So we're going to say bank, and this is going to be recorded on the credit side, since the goods were bought from the business. Since the goods were sold by the business. Let us take a look at another transaction, paid cash for repairs. So the two types of accounts that are going to be affected there, we're going to have the cash account and the repairs. So let us look at the information if you have been given the cash and the repairs there. As you can see, the cash we have been given as 120, but we don't have the repairs account, so which means we need to add another account there for repairs. So the balance for cash there, it's 120, So we're going to have the repairs account and the cash account. So the sole trader paid for repairs amounting to 50 kwacha by cash. So in the repairs account there, we're going to record cash. He paid by cash. That's going to be on the debit side. Since expenses have the debit side, then since he paid by cash, that means money was going out of the business, and we're going to record that on the credit side. But before we do that, we're supposed to write down our balance, and our balance that we had in the cash was 120, and we're going to say repairs. Since the repairs were paid out, this means that money was going out of the business, and that's going to be 50 on the credit side. Let us look at another transaction. Another transaction reads cash sales amounting to 240 kwacha. So cash sales amounting to 240 kwacha, and the two types of accounts here that are going to be affected, we're going to have cash and sales. So amounting to 240. So cash there, we're going to say sales. Since the sole trader sold the goods, that means that he was receiving the money, and he was receiving the money through cash. So which means we're going to debit that amount, so 240, and we're going to credit 240 in the sales account. So in the sales account there, we're going to say cash, and we're going to credit that amount, which is 240. Let us look at another transaction. Another transaction reads received a check from S Simba A debtor. Received a check from S Simba A debtor. That means that the two accounts that are going to be affected there, we're going to have the bank account and the debtors account. And for the debtors account, we have been given something. We have something there, debtors amounting to 4,220. So we're going to write down our debtors account, and the balance we have been given as 4,220, and one of the debtors for the sole trader paid out, and his name was S Simba. That means that we're supposed to reduce this balance, and the debtor paid by check, so we're going to say bank, and we're going to credit that amount. So he paid 520. So we're going to say debtor there. Since the debtor paid the business, the sole trader, that means that we're going to record that to the debit side. And as you can see, we are done with the transactions that we are given on 31st December. That means we can write down our trial balance. But before we write down our balance, let us just balance up our transactions. So for the purchases account there, we're going to add the debit side. The debit side there is going to be 7,450, and we're going to record that on both sides. And to balance up that with the credit side, we're going to add 7,450 as our balance carried down. Our balance brought down will be 7,450 on the debit side. Let us balance up the bank account. For the bank account, we're going to add the debit side and the credit side, and the amount which is going to be large, we're going to record it as our total, and there we're going to find 1,710 as our totals there. Then if we subtract 1,710 minus 700 and 520, we're going to have 490 as our balance carried down on the debit side. And if this is brought down, we're going to have the balance brought down on the credit side as 490. Let us balance up for the creditors account. So for the creditors account, we only have one figure there, so that's going to be easy. So 500 there, 500, and we're going to write down our 500 as our balance carried down on the debit side. And if it is brought down there, it's going to be on the credit side. Let us balance up for the sales account. So for the sales account, we don't have anything on the debit side, but we have all the numbers on the credit side. So adding up these numbers there, our total is going to be 14,340. We're going to have 14,340. Balancing up that means that our balance carried down is going to be on the debit side, and we're going to have 14,340. So we have 14,340 as our balance brought down on the credit side. Let us balance up for the repairs account. So we only have one amount there, and that's simple. Then for the cash account there, we have 120 plus 240 on the debit side, and we only have 50 on the credit side. So the amount here on the debit side is going to be large. So we're going to say 240 plus 120 there. The answer is 360, and we're going to record that on both sides. And we're going to say 360 minus 50 to find our balance carried down, and that's going to be 310 on the credit side. And if it is brought down there, our balance brought down is going to be 310 on the debit side. Let us balance up our last account there. So let us compare 4,220 and 520. So the large number there, it's 4,220, and we're going to record that on both sides. Then we're going to say 4,220 minus 520 there. We're going to have 3,700. So we're going to have 3,700. And that means that we have balanced up our accounts. So the only thing that we're going to do is to get our balance breakdown for each account there. So just take note of all the balance breakdown that we have found. So let me start with the first one. So for the first one, the purchases account, our balance breakdown is on the debit side, and we have 7,450. For bank there, our balance breakdown, we have 490 on the credit side. Let us look at other accounts. For the creditors account there, we have 500 on the credit side. Then for the sales account, we have 14,340 as our balance breakdown on the credit side. Then for the repairs account, we have our balance brought down as 50 on the debit side. Then for the cash account, our balance breakdown, we have 310 on the debit side. And for the debtors account there, we have 3,700 as our balance breakdown on the debit side. So let us go back to the question. So as you can see, we have recorded everything that took place on 31st December. So we can start by writing down the updated trial balance. But before we do that, let us just write down our balance breakdown. So for purchases, we had calculated as 7,450, and this had a debit balance. Then we also had bank, and bank we had a balance of 490, and that had a credit balance. Then we also had creditors, and that had 500, and it had a credit balance. Then we also had repairs, and repairs had a balance of 50, and that was on the debit side. Then we also had cash there had the balance of 310, and it was on the debit side. Then we also had debtors, and that had the balance of 3,700, and that was on the debit side. Then we also had sales, and for sales the balance there was 14,340, and that had the credit balance. And we can start with our first transaction. So we have capital we have been given as 4,480, and capital was not affected, so we are going to record that the way it is. So we're going to say capital on the credit side as 4,480. Then we're going to go to salaries. Salaries there have been given as 3,540. So we have 3,540, and that was not affected. So it's going to be written the way it is. So 3,540 3,540. Then we have debtors. For the debtors there, it was affected, so we are not going to get this amount. We're going to get our updated amount, and the amount that we're going to get 3,700, this amount, and it had the balance on the debit side. So that's going to be 3,700. Then we have purchases. Purchases was also affected, and our updated purchases is 7,450, and it had a debit balance. So 7,450 purchases. Then we have sales. Sales was also affected on 31st December. That means we need to get the updated figure, and the updated figure there we have 14,340, and that had a credit balance. So we have sales, and that had a credit balance. So we have 14,340. Then we have drawings which amounted to 1920, and drawings was not affected, so it's going to be recorded the way it is. Drawings 1920. Then we have bank, and bank was affected on 31st December, and that means we need to get the updated figure, and the updated figure we have 490 on the credit side. So bank 490 on the debit side, on the credit side, sorry. Then we have cash. Cash was also affected on 31st December, and that means we need to get the updated amount, which is 310, and that at the debit balance. So cash 310, cash 310. Then we have stock. Stock amounted to 1680, and stock was not affected, so we're going to record 1680. Then we have buildings. Buildings was not affected, that amounted to 720. Then we also have sundry expenses, which amounted to 440, and that was not affected. Amounted to 440. As we can see, we have finished all the transactions that were given to us in this trial balance, but we have other transactions that we are remaining with, like that of creditors and that of repairs. So we need to record these two transactions in the updated trial balance. So creditors of 500 and repairs of 50. So we're going to say creditors of 500, and that had a credit balance, and repairs of 50, and that had a debit balance. And there, if you add your debit and your credit, the answer must be the same. So we're going to add 3,540 plus 3,700 plus 7,450 plus 1,920 plus 310, then plus 1,680 plus 720 plus 440 plus 50, and the answer there it's 19,810. And if we add the credit side, so if we add 4,480 plus 14,340 plus 490 plus 500, we are also going to have 19,810. And as you can see here, we have the same answer. That means that our trial balance has balanced. I hope you have enjoyed the solutions of question 1C. So don't forget to like and share this video with your friends. Also make sure you support us through our services that we provide. We sell some past papers with answers. We sell some books, both soft copy and hard copy. We provide online tuitions. We also sell some full topics videos. We also provide photo and video shootings. So if you want to check the prices of everything that I've mentioned, you can check in the description box of this video. I'll meet you next time, and God bless. Thank you.